going to turn to the hot topic of global bank bonuses. They'll be up 35 to 40% from last year, but they may not reach the record levels last seen in 2007. That's the finding of Options Group, a global executive search and strategic consulting group. And Michael Karp, CEO and co-founder of Options Group, he joins us now with more. So talk to us a little bit about the numbers here. 35 to 40% higher than last year. What kind of numbers are we talking about for these people?
We're talking in the range of a few million for some of the people that run senior positions. And, we've seen today in the Bloomberg report that about $30 billion has been set aside by the top 3 firms to give bonuses out. And that'll average out to be a pretty big chunk.
And who's making the most at these banks?
The groups that perform really well are making the most of these banks. So the businesses that have done really well this year are the interest rate derivative businesses, the businesses in equity derivatives, businesses in commodities, and in FX.
Now, as we know, there's been a lot of talk by Ken Feinberg, who is the compensation czar, about what form the compensation is going to take. Is this cash compensation that you've been looking at, or does it also include some stock bonuses?
This includes both the stock bonuses and stock options as well. And these bonuses are probably going to be capped in cash levels.
But has the balance changed from previous years?
Yes, tremendously. Usually up till 2007, we would see 50% cash, 50% in stock. And now we see, last year we saw some of the banks cap their bonuses at $1 million in cash.
In this economic climate, how do you navigate the PR minefield?
That's a big question. It's a big PR nightmare for CEOs of major firms. I think this year they can take the luxury of sort of not going out and overcompensating their people, and I think to keep themselves out of the public eye, they'll have to do a lot more in terms of giving away to charity from the bonus pool and encouraging their employees to sort of give more on their compensation to charity.
Do they understand that disconnect, that Wall Street to Main Street disconnect, where you have people sitting at their dinner table trying to figure out how they're going to pay the mortgage, if they're going to keep their jobs, and then you hear stories like this where millions are being paid out in bonuses, again, in this economic climate?
Wall Street is about creating wealth. So when most of these kids graduate from colleges, they want to come to Wall Street to make money. So I think these CEOs do have the knowledge, and these guys were in the same position 20, 30 years ago, so they understand the disconnect, I think, more so than they ever did.
I'm curious what's happening too when you look, I mean, we're talking about these banks as a whole, but when you start to make distinctions between the different banks, what was talked about when Ken Feinberg came out with his rules is that the banks who were not subject to them would have a leg up in attracting talent. Is that something that you've been hearing about, that the banks who aren't under his purview are paying more?
We are hearing as a firm where candidates are concerned about the TARP firms and whether their guarantees will be honored or not. We do see a leg up for other firms to be able to go and attract talent that are not TARP firms.
And so what's happening then? I mean, does that mean that these other folks are perhaps getting lower quality candidates?
It's not that getting lower quality candidates, because when you're up top and you're looking for a serious candidate, there are very few of them that are available in the market. So it's like acquiring an athlete from Mets to the Yankees or vice versa.
So are we just to take it then that Mr. Feinberg's decisions or his rulings might not be influencing pay practices at all?
I think they are influencing the TARP firms, and I think the other firms are really keeping it in mind in terms of how the TARP firms will compensate. But still, if you look at the revenue basis of these firms, they have sort of blown out earnings this year in comparison to last year.
Just quickly here, what about the outlook going forward? Are we going to hit another record next year? Is this sort of going to be disregarded, the public view, going forward?
That's what everyone's hoping for, that in the future it gets back to normal. But I think Wall Street is going to view this as a year to really sort of hone in on their compensation practices.
Michael Karp of the Options Group, thanks a lot for coming in to join us. Appreciate it.
Thank you.